Agwinisha Korja is Misha Polo Kunigon. Welcome back to the second afternoon of day one of IST-Africa 2022. And this afternoon, we're focusing on collaborative open innovation and technology-enabled entrepreneurship. And we have presentations from Botswana, South Africa, the Czech Republic, and Namibia. So our first presentation is about collaborative open innovation through an open API approach to enable the development of financial technology infrastructure in Botswana.
Hello, ladies and gentlemen. My name is Thotobolo Morapedi from Routepay, Botswana, a research and technology development company based in Botswana. Our topic is collaborative open innovation through open API approach to enable the development of financial technology infrastructure, the case of Botswana. The current digital financial services ecosystem in Botswana does not have policies facilitating an open banking environment, and that is lack of public or open APIs, leading to the financial technology infrastructure not being interoperable. This paper aims to develop a conceptual framework that will enable the development of an interoperable financial ecosystem through collaborating open innovation in Botswana. We have gone through our literature review, which was used to identify developments towards open banking or open APIs in other countries. The national ICT policy, which has reviewed the e-commerce strategy for Botswana, were reviewed to identify developments in Botswana regarding the financial technology infrastructure. The literature review showed that the need for collaboration between banks and fintechs, as they can both benefit from the relationship. At the end of the paper, the results of the study achieved all the objectives, whereby an open API conceptual framework that will enable the development of an interoperable financial ecosystem through collaborative open innovation was developed in the paper. So we have seen that the financial sector or the financial industry is undergoing a significant shift, whereby digital technologies are reshaping the financial industry processes. And we have seen that COVID-19 pandemic has accelerated that. So governments have made efforts in developing frameworks for the private sector to accelerate digital technology adoption and to implement environmental, social, and governance norms. However, as we have seen, that governments need long-term vision to be improved. That strategies need to be improved to prepare for new challenges and proactive efforts to transform towards increased productivity and shared property in the financial services sector. So although we have seen this shift in other countries, whereby many economies which are more diverse, competitive, and effort and inclusive around the world, especially in the world country, the emerging and developing countries such as Botswana are still lagging in terms of innovative solutions in the e-commerce ecosystems space. So this way our topic or our research is focused to see why our ecosystem in Botswana or the the payment infrastructure is not interoperable. The motivation of this paper is the payment infrastructure is not interoperable. It lacks open APIs, tight regulations that slows down innovation. And then we see that fintechs are struggling to penetrate the financial industry in Botswana. So the objectives of this paper, of this research, were to develop an open API conceptual framework that will enable the development of an interoperable financial ecosystem through the collaborative open innovation approach in Botswana, to develop a mobile payment architecture based on the open API conceptual framework that will provide recommendations for financial institutions, and that is fintech startups, technology companies, and regulators in Botswana. Basically, all the stakeholders that are taking part in the ecosystem, the financial ecosystem. The third objective is to develop a mobile application as a proof of concept based on the developed open API conceptual framework. So our research approach methodology is we looked at a literature review. Peer-reviewed literature. Peer-reviewed literature was searched and reviewed in the electronic databases such as ScienceDirect, Elsevier, Google Scholar, IEEE to compile our research. And the use of open APIs in other countries were looked into or were researched to see how other countries have opened their APIs or they have gone about the whole industry. So the literature review process was used to appreciate the developments that have already been implemented regarding the use of open APIs in financial technology sectors around the world, and how Botswana can adopt the same approach used by other countries to promote collaborative open innovation. Peer-reviewed, as I said, peer-reviewed literature was searched in the electronic databases such as scientific journals to compile our research. Developments in other countries. How other countries have developed these. So in several well-known businesses, they serve as excellent examples of how APIs work and support innovation around the world. We see that Stripe, a payment process, for example, a payment process, a processing service business, has simplified the credit card integration process by allowing developers, fintechs, to accept credit card or for fintechs to integrate with their APIs and develop applications that accept credit card with a few lines of code. We have seen that in Uganda, for example, a fintech called Namibia provides small and medium history and balance information from a customer's bank account to the app. In Nigeria, has several companies that develop the open banking initiative such as Mono, which enables African digital enterprise to gain access to the consumer's financial accounts for data and payments with Flutterwave as one of their current users. So we have seen the regulations. In terms of regulations, we have seen PSD2, which is Payments Services Directive 2 in the European world or in the Europe, which enforces or which forces banks to open their APIs for smaller or fintechs to be able to integrate and provide a democratized financial services to the people. The Nigerian regulatory framework is also forces the East banks to open APIs to the public for them to be consumed by the public or fintechs and provide financial services to the masses. And larger institutions are opening APIs in other countries, such as Saxo Bank, which has opened the APIs to the public. So that's how other countries are consuming, or they are opening their APIs. So in our take, or in our research, we have developed an open, based on our research, we have developed an open API-based conceptual framework, whereby commercial banks and mobile money providers can collaborate with third parties and open APIs to third parties, which are fintechs providers or third-party app developers, so that they can serve financial services to the customers and pass information such as payment information to the merchant side. So this is the developed framework that we have developed based on our research that includes 4 major players in the ecosystem, which is commercial banks, the mobile money providers, which are big here in Botswana, such as Orange. We have Orange, Botswana Telecommunications. We have also Mascom, another telecommunication, who provides mobile money services, and whereby they can open their APIs for fintechs to integrate their system and provide different use cases to the customer and the merchant. So in the literature review was where it was saying was undertaken to meet the 2 objectives: to develop a conceptual framework that will enable the development of an interoperable financial ecosystem through collaborative open API in Botswana, and 2, to find business benefits of collaborative open innovation for organizations in Botswana. So based on those 2 objectives, a deductive approach was adopted to elicit patterns relevant to the development of interoperable financial technology. So our analysis of the documents enabled the researchers to understand the underlying concept of open API and open banking, and therefore that a conceptual framework was developed. So the developers, the researchers, developed an open API-based conceptual framework for collaborative open innovation through the open API concept and collaborative innovation approach derived from reviewed literature. In the developed framework, there are 4 key players, as I said, including financial institutions, third-party providers, consumers, and merchants. So for financial institutions, these are financial service organizations with accomplished back-end financial systems. They develop and provide financial APIs, which can be private and also open to select third-party providers, or open the APIs to the public altogether, where anyone with technical capacity or capability can consume those APIs. So the financial institutions included commercial banks and mobile money providers who can collaborate with third parties to innovate. So for third-party providers, these are fintech startups that consume public APIs from API providers to deliver financial services to the market. Fintech startups collaborate with API providers to to draw different business models and use cases by building mobile application in this framework. So by opening their APIs, financial institutions will benefit through a revenue share models agreed with third-party providers, while the fintech ecosystem becomes more competitive and encouraging more innovation. So for consumers and merchants, or the customers and merchants, these are the two-sided market service by the fintechs and startups through the open API concept. For example, consumers may use mobile applications built by fintechs to pay for goods and services to merchants through the means of QR code, for example. This means both the consumer and merchants need to open personal and business accounts with financial providers who act as issuers or acquirers. The apps built by fintechs may take different approaches depending on what they are capable of, such as aggregation of payment to populate all services into one app, or single service apps to deliver services to the merchant. So one of the infrastructure of the mobile payment that we have built, this is the infrastructure, which includes the consumer who sends the payments information to the account holder, or the open API, or the API central processor, where the commercial banks or mobile money providers are the custodian account holders, and then the money will be transferred to the merchant accounts, and then the merchant can receive the money. All this happens within a second. This is our framework or our architecture. So therefore, the researchers have developed a application as a proof of concept, which uses a QR code, a mobile application. So the application allows customers to pay merchants by scanning a QR code, and where it's connected through API, it consumes API to from financial institution. Yeah, whereby a third-party financial institution processes transaction data to make payment between customer and merchant. So what are the business benefits of the developed conceptual framework? So the developed conceptual, one of the business benefits is that financial service providers will generate revenue. By opening API, it becomes their business revenue making strategies. So the fintechs can also develop different solutions, and generate revenue. Also, by opening API, more fintechs or companies will become innovative, whereby small businesses can benefit from the payments ecosystem. So the financial service providers, or FSPs, stand a chance to be the biggest beneficiaries in the ecosystem by way of new revenue models and merchant network expansion, if they collaborate and open the APIs to be consumed by third-party financial service providers. So the commonly used model here among API providers is when the API consumer pays a fixed fee per transaction or per API call made by the end user. Moreover, so the financial service providers can use open API to drive more users to their platform and improve the company's reputation. So fundamentally, companies that develop their own APIs generate revenue from their companies that use the app and the company using the app gets a greater efficiency, which generates revenue for them as well. So for fintech startups, these are API consumers enabled by API providers to build on top of their platform and develop different value propositions. So everybody gets to benefit from this collaborative framework, open API framework. So for our conclusions are that open APIs can unlock digital transformation of the fintech sector and improve innovation in the country. And leading financial institutions should open APIs to collaborate with fintechs to improve our financial service ecosystem. And then flexible regulations and policies should be made in order to relax or to make the barriers to entry in this industry low, so that the ecosystem can improve. And thank you very much for listening to this presentation. Thank you.
Thanks very much, Thotobolo. This is a very interesting topic. And as many people know, the regulators in East Africa showed leadership on the continent in terms of how they approached trying to open the banking system, which enabled a lot of the emerging fintech that we've seen over the last decade. Open data obviously has significant potential to catalyze new products and business models, as you've alluded to. And the European Union has promoted strongly proposed rules of engagement to facilitate such innovation through an updated version of the Payment Services Directive. The potential benefits of open banking are substantial, and you've highlighted some of them, but some of the ones that you haven't mentioned relate to improved customer service and, critically, a sustainable service model for more traditionally underserved markets. Obviously, all of this innovation, however, has significant implications for the financial services ecosystems, including the evolution of the roles of established banks. So why do you perceive that there have been delays in adopting an open API framework for the financial sector in Botswana? What is the public position of the regulator in Botswana in relation to opening up the financial ecosystem? And what are some of the business model implications you foresee for existing financial institutions? Thank you.
Thank you very much for your question. Greetings to you. I'll start with the first questions. What are the delays that hindering the development of the ecosystem in terms of financial services in Botswana? First of all, some of the delays, as I've alluded to, that the regulation, the financial regulation here in Botswana, the regulators have put up strong measures towards the development or towards financial institutions who want to provide financial services through electronic means. That means the regulators have put up some measures, such as one, a smaller fintech or a financial, anyone who wishes to provide financial services has to have a sum of around 200,000 US dollars, which translates to around 2 million pula, as a capital, a upfront capital. So you find that most of the developers or most of the smaller financial services do not have that capacity or do not have that kind of money to provide such services. This is done in case it is done to combat situations whereby people would provide financial services and then use customers' money for business operations. So the 2 million pula or the 200,000 euros is put up front to avoid people from using the customers' money. So it's upfront money. The capital is used to. So you find that lots of innovators here, they do not have capacity, or they do not have funding to provide to meet this regulatory measures. So secondly, the reason why there's a delay is because even the big players here, they're kind of reluctant to open up their services to third parties because of maybe security. Security is a major issue. They are afraid because this financial services is very sensitive. So in Botswana, in terms of security, technology security or cyber security, it's not that strong. So financial service institutions are reluctant to open their system to the public because we do not have a robust or secure systems, or we do not have that capacity to secure financial service for the providers. Thirdly, some of the hindering factors is the slow adoption of technology by the consumers. You find that here in Botswana, people are very slow to adopt. They would rather rely on cash because it's immediately available, or people have a relationship with cash, with physical money. So it's very difficult to adapt to new means of payments, or new means of transacting through a mobile phone or through electronic means. So the reluctance of adoption, or the low adoption of technology in Botswana is one of the measuring factors, the major factors that hinders the development of innovative financial services. So companies or the banks are reluctant to provide such services to the customers. But due to COVID, we have seen that after COVID, in the wake of COVID, we have seen that some few companies are now trying to move their customers towards digital payments and financial online payments. They're encouraging their customers, and people are slowly going there. So at the time when we were writing this paper, there was no open API in the market, but now we have seen one of the major telecom companies have opened their APIs to the public, which is a sign, one sign that people are now they're now seeing the benefits of going digital through financial services. So I hope I've answered some of your questions. Thank you.
No, thank you very much. That's very useful. And it's good to hear that something has changed. But I also think it's interesting that you don't perceive it so much to be reluctance by the regulator, but more slow adoption and slow demand from the consumer. So that provides some very interesting insight into the Botswana market as well. Thank you very much for that. That was very interesting. Okay, so our next presentation is from Julien, and I'm going to switch over to the presentation now. And this is focused on talking about non-financial support needs of tech startups to minimize risk of failure.
And I'll be presenting the non-financial support needs of tech startups to minimize the risk of failure. And I was supervised by Dr. James Njenga, and from the University of the Western Cape, South Africa. The motivation, the problem area is what goes into with the rise in technological advancement. The topic that really stood out to me was tech startups. So a tech startup is any emerging company that offers a new or old technological product or service to a market to solve a specific problem or act as a solution. And it has to be a startup that is focusing on technological services and or products. Tech startups are generally less than 5 years. They have to be less than 5 years, otherwise it's no longer a tech startup after they've reached the 5-year mark. And through researching, a lot of what I noticed was that there was a lot of focus on the financial needs of startups and tech startups. As my topic focused on tech startups, there was very limited available resources on the available non-financial support, while there was a larger number of available resources focusing on the financial support needs of tech startups. Through research, reading multiple of articles and resources, what was noticed is that a lot of tech startups have been recorded to fail after receiving financial support. This highlighted that financial support is not the only determining factor that will ensure the success of a tech startup. The support needed by tech startup is beyond funding alone, and this sparked an interest in the non-financial support needs of tech startups. And the limited focus on the non-financial support, research needed.
I don't hear it either. It's like it stopped.
Done to further.
Yeah, it's back.
Goes into the rise in technological advancements. The topic that really stood out to me was tech startups. So a tech startup is any emerging company that offers a new or old technological product or service to a market to solve a specific problem or act as a solution. And it has to be a startup that is focusing on technological services and or products. Tech startups are generally less than 5 years. They have to be less than 5 years, otherwise it's no longer a tech startup after they've reached the 5-year mark. And through researching, a lot of what I noticed was that there was a lot of focus on the financial needs of startups and tech startups. As my topic focused on tech startups, there was very limited available resources on the available non-financial support, while there was a larger number of available resources focusing on the financial support needs of tech startups. Through research, reading multiple of articles and resources, what was noticed is that a lot of tech startups have been recorded to fail after receiving financial support. This highlighted that financial support is not the only determining factor that will ensure the success of a tech startup. The support needed by tech startup is beyond funding alone, and this sparked an interest in the non-financial support needs of tech startups. And the limited focus on the non-financial support, research needed to be done to further understand the non-financial support needs of a tech startup. So the research then sought to gain information and knowledge in the interest of this specific problem area. And when it came to non-financial support, it included support where digital entrepreneurs and a specific and respective tech startups would receive support that was not capital, monetary investment, or physical cash that they would receive. These non-financial supports would include support such as legal support, mentorship, and having access or being part of tech incubators, tech hubs, and business incubators. So with regards to non-financial support, it was any support that didn't include the tech startup itself receiving cash. So with these, it did not mean that every tech startup had the same support needs. Different tech startups had their own specific different support needs that they needed to ensure their longevity and to ensure that they're able to function on a day-to-day basis, or to guarantee that they'll be able to be present for a long time. And they showed that the non-financial support needs would depend on the non-financial support needs for the success of the innovation. And with the research objectives, one thing that also stood out is that many digital entrepreneurs were focusing more on sourcing the financial support, while the financial support is not the only determining factor of their success. So therefore, there was a need to understand the support needs of the tech startups, as it will allow for focused and relevant interventions to support the tech startups in South Africa. The research objectives were to explore the non-financial support needs of tech startups, also to explore the different non-financial support that tech startups have received in South Africa, and to describe the different benefits of the different non-financial support received by the tech startups and their respective digital entrepreneurs. The research approach that was used and the methodology was, for the research design, a qualitative research approach was used to get more of a narrative description of what exactly have the digital entrepreneurs and the tech startup have received, using an exploratory, descriptive, and contextual design. And the research instrument that was used was an interview schedule, was used to collect data, and then it was followed by sub-questions that allowed for further information to be discovered. So this was done by having a schedule and then going off based on what the participant may say, and then probe further if they were not 100% clear as to what they were trying to say, or to ensure that there was clarity and we were both at the same understanding of what the participant had said. When it came to sampling, individuals were interviewed using snowballing methods. So this is done by interviewing 1 to 2 or 3 people, and then from there they connect you to someone else that they know. So in my case, I interviewed 2 participants within the tech industry who are tech startups, and they connected me to other digital entrepreneurs that they knew who have their own tech startups until data saturation was achieved. The collection technique was through semi-structured interviews, which were conducted with participants, and they lasted between 15 minutes to 40 minutes. They were done via WhatsApp call, Teams, and Google Meets and mobile phone calls, where all interviews were being recorded and the participants were notified that the interviews were being recorded so they can be transcribed and later on be used for coding. The major outcomes and the results, one of the major outcomes that supports discovered was through conducting interviews. So a wide range of supports received and desired by the digital entrepreneurs of the tech startup were mentioned by the digital entrepreneurs. These supports they were categorized into 3 specific groups. So these groups were called exposure, organizational, and development support. So all the different supports that I had gotten from the interviews with the participants had been grouped into these 3 specific groups, which helped narrow down the specifics of the type of supports that they have received and that they require. With the first being exposure support, focusing on branding and marketing. So one study participant was able to market the tech startup and link their product with already established brands. And this was also through the aid of a news article that was published and allowed them to to be able to connect to other individuals which were already established since they were published on a news article. The other exposure support was opening doors. So this focused on the support related to the support that offered the digital entrepreneurs opportunities to enter different spaces where they would access customers for their tech startups. And the last exposure support was interconnection. Through doors being open, connections were easier to make as they provided access to market for the digital entrepreneurs. The second category was organizational support, which focused on support that was directly beneficial to the entire startup. And a common support received was consulting support. So this included legal support. So this would be support that the tech startups would get from advisory, legal support, contracts, and following the legalities of the product that they may be producing, with one participant creating and selling gas canisters had to ensure that they were compliant, and legal support did aid them in this instance, as they had to make sure that their product was not harmful and that the gases were in compliance with safety regulations, showing that organizational support was important for them and was necessary, as without it, it would have been a legal battle. With one participant stating that they had to go through a lot of regularity hurdles and were able to overcome them with the legal support. Developmental support focused on the dedicated, which is support such as mentorship, where the digital entrepreneurs would get specific support that is directly for them and is tailored for their tech startup. So that would be guidance in how to operate and set up the tech startup. Digital entrepreneurs were linked with other relevant parties for the growth and success of their tech startups through their mentors. So the mentors would scope and see exactly where and what the digital entrepreneur is trying to achieve with their respective tech startup and aid them in connecting with people who are relevant in their space. Participant 3 of the study mentioned that, quote, they helped you with finding clients for your business, and they link you up with the right people to sort of grow your business, unquote, showing that the aid that the mentors did provide them were specific into that they connected them with like-minded people within the same industry, tech industry, as they may be, whether it may be providing a service or providing a product or selling a product. And one-stop shop was another support within the developmental support category, and these included tech hubs and business incubator. Several participants did mention to being part of tech hubs, and one of them did mention that tech hubs and business incubator did help them in providing office space for them to operate in, instead of having to struggle and find a place to operate and carry out their daily function. So they were able to gain office space since it was a one-stop shop where they were able to get multiple of support, not just limited to office space, but also guidance and workshops. And the last development support received was a collaborative platform where participants did mention being part of a collaborative platform where same stage tech startups could communicate and work together. And several other participants did mention that they wish there were more collaborative platforms that they could be part of that would aid them in communicating and staying up to date with same stage tech startups to track each other's progress and to aid each other. Well, the conclusion of the results of the research is that with there being limited available resources on the non-financial support needs of tech startup, interviews were conducted and gave a first-hand view whereas getting written information on what has been would have been beneficial, but it's more beneficial to get the first-hand experience and view from the actual digital entrepreneurs to give their experiences with their tech startups. Starting a startup requires both financial and non-financial support. The financial support is not the only factor that can determine the success of a tech startup. Through interviewing participants, as mentioned, they were able to emphasize on the non-financial supports that aided in their longevity. The non-financial support, there were more than one category, as previously mentioned in the results, and they were grouped for simplicity to narrow down exactly what was the beneficial and the focus of that support. Access to market was a sort of the support that was mentioned regularly by participants wishing that they had more access to market, where they may have felt certain biases or it not being an advantageous point, since it was a support that mentioned and showed the longevity of tech startups, and multiple participants stated it being the main reason for the tech startups not failing it within the first 2 years, and those that had not received wished to have received it as they found it very beneficial as others. And these are my references.
Thanks, Julien. This is a very important topic for people to consider. So you've talked about some of the things that people said were important, including consulting report, mentorship, access to one-stop shops, collaborative platforms. But one thing I noticed you didn't talk about so much was capacity building, in terms of actually directly building the capacity of the entrepreneurs themselves, whether it's related to marketing skills, technical innovation, process management, and things like that. So can you talk us through a little bit of that? Was that something that didn't come up at all, or was it just something that people didn't see as important? Thank you.
Thank you for giving me the time to speak and for presentation. It was something that was brought up where very few of the digital entrepreneurs did speak on it, but they didn't really speak on it as in depth. They have mentioned that they had received some training on how to manage their business from a day-to-day perspective, and from building their employees to be capable in conducting the day-to-day functions. It's just that they were not 100% as descriptive as to what exactly was taught, as not all of them received it from the different incubators, whereas the incubators focus mostly on giving them things, but not necessarily specifying as to what development skills that they may have gained from it. Wasn't really spoken as much.
No, I understand. And that was something I wanted to explore briefly as well. What were the primary benefits that they perceived of engagement with incubators, accelerators, and the like?
Yes. The main one that was stated by most of them is that they were able to get access to mentors, and the mentors really helped them, because I had a few participants that mentioned that because they came from rural outskirts, they weren't able to get access to market easily, because where they're from, the product that they may be producing or the service that they be producing may not be easily affordable to the people that they targeting or they're trying to create the solution for. And so since they were in a different city, they were struggling to make contacts with people that can aid them in trying to make their product more affordable for people from where they're back from, and to be able to sell it in different areas rather than just it being a product that can only be sold in one region. And yeah, so it was the mentors and the access to markets. Yes.
No, thank you very much. That's very useful. So are there any other questions or comments for Julien before we move on? Okay. Julien, thank you very much. I think what you're doing is very interesting. Thank you.
Thank you.
So our next presentation is from Buntu, talking about the TechTribe innovation platform. Okay, I'm going to restart Buntu's presentation. It doesn't seem to be running properly.
Pleasure to be here, and thank you very much for the opportunity. Today, I will be sharing about TechTribe and how we are developing an innovation platform for startups and high growth SMEs on the continent. My name is Buntu Majaja. I am CEO at the SA Innovation Summit in South Africa, from South Africa. So really today I'll be happy to cover three things. The thing is, we've developed an acceleration and virtual mentorship program, which is the TechTribe Accelerator. And I would like to introduce this as how it has been an attempt for us to democratize and create acceleration services on the continent that are more accessible to more entrepreneurs. Along the way, I want to share the lessons we've had and the things that we've experienced, as well as outline what we now believe is important to include as best practices, as well as ongoing cases going forward. We believe that the African entrepreneur is the one that builds the continent. They can solve the triple threat that we have of poverty, inequality, and unemployment. And they can do this above all while adding to the economic situations of their respective communities and countries. And so we exist to support them to do this. And we do this by connecting them to resources that will allow them to thrive, where we work with development agencies and corporates to do so. And the entrepreneurs that we've particularly focused on are those that are in the valley of death. This is essentially where the entrepreneur and the business is not big enough that it can make sense for the economics to attract the right resources towards it. But at the same time, it's not quite too small or negligible in the sense that there is risks involved and that there will be economic consequences to pay shall it fail. And so this is where the valley of death is, and where the TechTribe Accelerator focuses is to lower the rate of failure within this space, because if we can do that, we believe that we'll have many more high growth entrepreneurs that go on to employ hundreds of people that come out of the other side of the innovation funnel. And that being said, it is important as well to mention that not only do we want to be an intervention within the valley of death, but also a connector, which means becoming part of a value chain within the origination pipeline, where we're focusing particularly on the valley of death. But once they leave the valley of death, they are able to be connected to other players that will support them to scale. And a little bit about the TechTribe Accelerator is that it was really about creating more access to acceleration services on the continent, world-class acceleration services. And we created it as a founding team made up of the S Innovation Summit, Impact Amplify, Awuda Nepads and Bio, and MHub Malawi. We did this with the support of the Southern African Innovation Support Program, or known as SACE2. And this was in 2018 when we came together to realize that the innovation capability in Southern Africa needs to be raised. But at the same time, the services related to acceleration are concentrated in first-tier cities around the continent. the Nairobis, the Lagos, Cairos and Cape Towns, Johannesburgs of the continent. Whereas the second tier, third tier cities were not getting access to this knowledge and resources. This also includes the experience and expertise that were held by the mentors. In other words, the experience in the mentees and the expertise that were held by the mentors were in few minds, which were in disparate locations around the continent. And so as a program, we wanted to raise innovation capability, particularly in Southern Africa, wanted to raise the access to acceleration services, and we wanted to bring all these mentors and these expertise into one platform and make them reachable, because it's not people that don't want to be reachable, but they don't have a place to make their experience useful. And then we would run a pilot program that would build traction and prove aspects of this model. And so in 2019, we were doing research and design for the TechTribe Accelerator and launched our alpha version in Q2 of 2019. Following that, we could launch, after some testing and a roadshow, we could launch the full version at the YES Innovation Summit. This was then taken into an initial call for applications towards the end of the year, which would start with about 150 entrepreneurs for the pilot program in 2020. As we know that we all had the defining event called the COVID pandemic lockdowns, but because we were already online, our programming was not affected at all. In fact, our research found that the entrepreneurs those that stayed found it supportive and capability to build resilience by staying within the program and being part of the TechTribe Accelerator. Throughout that year, we realized that online training demand had surged, and we found ourselves being advisors to hubs as well as organizations that were running programs. We wanted to find out how to run it online. Of course, there were many challenges in the process. It's a very difficult process to automate, to build, as well as put together in a seamless user experience, which is things that we are still continuing to do. But in 2019, we were able to capture these lessons and start pivoting our thinking in terms of going from a cohort model into a scalable model, which I'll touch on a little bit later. This was really around the time when the program was completed. And by the end of 2021, we had worked with 1,500 entrepreneurs across 16 African countries, and saw that in terms of the funding that was provided and given to run these programs through the TechTribe Accelerator model and platform, we could bring back a 20x to 50x ROI. That's a business case that supports both business in the private sector as well as in the public sector. Many of the development agencies are looking for impact outcomes. And so M&E and capturing the learnings becomes important for us, which is something I'll also touch on a little bit later. But really here today, as we're running 3 to 4 programs where some of them are in specific industries like blockchain or aerospace, whereas others are also expanding in terms of where in the valley of death we focus. There's the earlier stage where there's prototyping and getting into the market, and then there's later stage where you are raising funding. And so we're expanding as well our catalog of content as well as our network of mentors. Having worked with the 1,500 entrepreneurs, over 60 mentors in 16 African countries, we've started to think about how do we take these lessons from the SACE program and turn them into best practices. And there's 3 key insights which I'd like to share. Firstly, mentorship has the largest impact on outcomes, but it is the most difficult part to scale. This is because it requires hands-on task and hours from highly skilled mentors and experienced mentors. These are people that want to provide their feedback and give back. Not only is it an opportunity to get into and involved into something exciting and new and fresh, which keeps them on their toes, but it's also an opportunity for investment prospects. And at the same time, good old giving back. So when we started, we actually tried 3 models of mentorship. And we experimented with these. These ranged from low touch to high touch. And we found that the high touch was really the one, when coupled with a structured process, would give the best results in terms of impact outcomes. However, facilitating this is challenging. And so the key areas that allowed for scalability around this model is that the recruitment and onboarding process needs to be automated. And secondly, there has to be incentives that are built around mentorship, including remuneration. That does not mean covering the mentor's time, but it does mean showing some level of appreciation, not to make it worthwhile, but as an incentive. Others may include showcasing, include options to invest, and include access to other platforms that we have, such as the S Innovation Summit. Another secondary insight is that internet infrastructure does remain an issue across the continent, but it can be overcome in the short term. This is because the entrepreneurs that we want to create access to are solving issues in the grassroots. They're in the communities, sometimes in villages, 2nd tier and 3rd tier cities. And the internet access and infrastructure there, which is the pivotal point for the TechTribe accelerators access, is not always reliable. For us, this meant that making sure that the platform is mobile friendly and that the bandwidth is able to adjust and adapt to the circumstances of the internet infrastructure. That includes offline mode, where you can go and download certain parts of the program while you are on a Wi-Fi hot zone. Going forward, I think it is important to partner with hubs in different cities and different countries where entrepreneurs are able to go to access the internet. Thirdly, is that multi-year programs are the best for this kind of approach, because they result in an exponential ROI where you're able to build on the lessons from previous programs, which result in the best business case for private and public sector funders. And we found this really when we ran about a 3-year program of female tech entrepreneurs. And every single year, we're able to slightly tweak the outcomes, slightly tweak the focus, and slightly tweak the communications and the value and the process within the acceleration. Still at the same time, keeping it at low cost per head because it's largely online. And also because of the COVID pandemic, we were essentially locked down proof in our model. But given this ongoing compound effect, we were able to, over time, properly ramp up the project scale and raise its overall impact outcomes more effectively. And we found that from the beginning, the first year up until the last year, this is where we could multiply the ROI by 20 to 50x over time. And this is because there's a compounding effect where we capture the lessons, look back and report on them, but also tweak in the following year. And I think this is an important aspect going forward, that programs such as these should be multi-year. They should be allowable to be tweaked over time. You design the first year, you capture the lessons, and you work towards certain outcomes over 3 to 5 years. That being said, our next steps are really to find critical mass. for the entrepreneurs on the platform. We want to become more scalable. And the scalable model means that the entrepreneur, wherever they are, no matter what time and whenever it is, they are able to access the TechTribe Accelerator as long as they have an internet connection. This supports findings that we saw that 80% of the entrepreneurs prefer to do the acceleration online because it's more convenient for them. But at the same time, they also prefer to do it online because they can go back and forth and they're able to work with their team members as well, instead of it being in a single room. So when we are able to get 5,000 entrepreneurs on the platform annually, we believe that we will reach network effects and activate economies of scale, which will make it much more simpler and easy for all entrepreneurs on the continent to be able to access the resources that make their businesses thrive. At this point, we continue to do a cohort approach to build on these numbers annually until we get there. I hope that this has been interesting, and I'll be happy to connect for questions or discussions. Thank you very much. Please feel free to reach out.
Thanks, Buntu. That's very interesting. I'm particularly interested in some of the lessons learned related to motivating mentors and so on. But can you talk us through two issues that I think people might find of interest? First of all, with mentors, how did you manage potential, perceived, or actual conflicts of interest?
Thank you. Thank you for the question. Thank you for the opportunity to present. When it comes to conflicts of interest, we primarily segment. I mean, it depends in terms of the program itself. Sometimes there is an opportunity for the mentor to be an investor. However, if that isn't an opportunity, or the program funder doesn't want that, then there is a cooling off period between the mentor's interaction from the program until after they can interact again with the mentee after the program. So some cooling off period can be applied where there is a clear conflict of interest. And secondly, the matching of the mentors is done, and the mentees is done through background checks to align expertise, but to disalign interests. So that would mean geographical competition will be taken out of the way, IP competition will be taken out of the way, and those things are prioritized in terms of the matching process to limit conflicts of interest.
Okay, thank you. So that eliminates or reduces to some degree conflicts of interest with the program, but not necessarily competitive intelligence they may have gained by talking to the entrepreneur. But I suppose that's something to talk about another day. And then the last point I wanted to raise with you was in relation to lessons learned where things did not go as expected. So you've talked to the lessons learned, and that's very valuable. But people sometimes also learn from things that didn't go as planned. So were there, leaving aside the COVID effect, which I know affected everyone, but were there some things that you were hoping to achieve through this program and that you had unexpected outcomes that you could share with people?
Thanks so much for the question. Yes, very true as well that the pandemic did highlight a lot of things that happened. I think that there were two things that I would like to touch on briefly that going forward we are learning from. Firstly is how we organize collaborations. We built the platform as a consortium
this is very beneficial, being able to leverage from each other's comparative advantages and skills, expertise. And at the same time, we could partner in this way based on a very robust consortium agreement. Given said circumstances, working over 2 years, initially interests were aligned, but later on interests weren't as aligned. This was about 18 months in. And so one of the things that we hadn't included in our consortium agreements was how we would offboard and onboard members once this happens. And I think considering the resource constraints on the continent, collaboration will continue to be an important medium of achieving important work or good work. And so keeping in mind how consortiums may interact, that even though that we had initially planned we'd be building and taking the project to the next level together. At some point, one of the consortiums was onboarded, and now we are able to onboard new consortium members if need be, and also how we share IP and so on. And I think lessons here on this have been to keep in mind, A, collaboration will be important, and B, collaboration does not always work. You want to put it up front that when it doesn't work, all the various mechanisms on how you can still proceed with the outcomes. Secondly, I think the aspect of mentorship had been a continued challenge for us, and I think this continues to be a challenge in general in the ecosystem. And as you rightfully mentioned, conflicts of interest do arise, and that limits the scope of mentors which we can match when they do arise. I.e., we might not make some matches because of such potential conflicts of interest. But we hoped essentially to build a database of mentors that would be participating within our programs continuously and quite intensely in terms of time commitments and so on. And initially, we actually struggled to get a lot of mentors. We did get sufficient mentors, but over time found that they would either lose interest or they would get caught up in something else, or their schedules would change and so on. And so over time, we then had to develop various incentives and also develop a high level of supply in order to meet the demand. So the incentives that we'd put in would include really working hard, and we continue to try to do this, to make it a prestigious experience and a prestigious, to add prestige to the mentorship. We also ensure that we align the level of the mentor to the program. Suite 500 employee corporate or company mentor shouldn't be mentoring a prototype, not a prototyping, but an early stage commercializing entrepreneur that has not raised funding yet, for example. And so our matching in this sense became important. And then secondly is the mentor guides, which are really the processes and standard operating procedures that we put in place to make the mentor's time as worthwhile as possible and as useful as possible for both the mentor and the mentee when they got together using these guides. And then lastly is continuously building a database of mentors and maintaining almost an ongoing relationship with them, having a relationship management process with them as a community, where we are able to tap into that database when needed, hence having sufficient supply as needed. These are at least the ideals of our design and our work, and of course not quite yet perfect, but these are what we're working towards.
Thanks, Buntu. That's very useful. So there's a comment that Sarathal has shared, and she asks if you could kindly share some of the incentives you introduced to the mentors. So could I ask you perhaps if you could share that in chat, because we're running a little late and I need to go on to the next presentation. So thank you very much indeed. So our next presentation is from Otakar, and it's an assessment of regional attractiveness for tourism. Bear with me a second.
Good afternoon, my name is Victoria Stolpova, and I would like to present our research focused on the assessment of regional attractiveness for tourism in selected African countries. We, the authors of the article, are a team of 4 researchers who have been dealing with the assessment of attractiveness of regions for a few years as a part of the Polyrural project. Namely, there is Otakar Cerba, who is the most experienced of us and who is naturally the leader of our team. Apart from coordination of the research, he focuses mainly on the open spatial data, data semantics, cartographic visualizations, and web services. Next, there is Sarah Walton, whose domain is the environmental science, with emphasis on sustainable governance. Me and Sarah, we are engaged in methodology, data collection, analysis, and following interpretations. Last but not least, there is Jan Matsura, who is responsible for the development of the interactive web map applications. That was a brief introduction of our team, and now let's move on to the content of the presentation itself. Firstly, I will speak about the research objectives and our approach to the regional attractiveness for tourism, following with the main outcomes of the research. Of course, I will mention several examples of business benefits, and I will show you some maps with short interpretation. So let's start with the motivation to focus our research on this topic. The importance of tourism industry in the modern economy has steadily increased, accounting more than 10% of total global GDP in 2019. Then the COVID-19 pandemic started, but despite the severe impacts of the pandemic on the tourism industry, it is vital as a driver of economic development. Also, in the African continent, tourism has become a key sector for economic development due to increasing international recognition of Africa's rich natural and cultural assets. And also, thanks to specific tourism boosting initiatives that have been launched in many African countries. Nevertheless, Africa is still in an early stage of the development of its tourism sector. In our research, we focused on 2 neighboring countries, Uganda and Kenya, to assess their potential attractiveness for tourism. Both countries have a very rich biodiversity and culture, and tourism has become a priority industry, especially safari and ecotourism are among the most important tourism branches. Despite their similarity in terms of tourist values, Kenya and Uganda differ greatly in their social, political, and economical attributes. Therefore, we wanted to apply our method for assessing the regional attractiveness, which is based on objective data. to analyze the tourism potential of these countries. As I've already mentioned, our method is based on objective data and combines statistical calculations and GIS-based methods to leverage the strengths of both approaches, and because it enables us to integrate various and multiple types of data. The aim is to calculate the value of the regional attractiveness and afterwards to visualize the output via maps. Since the outputs of the presented research are also aimed at GIS and map non-professionals, the assessment of regional attractiveness must be presented in a straightforward, understandable, and attractive way. In addition, personalization is another essential requirement of the target group. So, except for static maps, we have also developed web applications with many interactive features that enables the personalization. To start from the beginning, in our approach, we analyze tourism attractiveness based on the presence of tourism values and tourism infrastructure. That means different types of physical attributes, such as number of hotels and other kinds of accommodation, the accessibility of ATMs, banks, exchange offices, restaurants and cafes, or the distance from the nearest international airport or a ferry terminal. And of course, we also consider the amount of touristical attractions like the UNESCO sites, natural parks, and wildlife reservations. Although we see the value of including also the non-physical characteristics, we choose to only assess physical attributes at this early stage of the development because the data on physical attributes are easier and more reliable to obtain. The sources of used spatial data are the Smart Points of Interest web application and OpenStreetMap database. The obtained spatial data were further processed in GIS and statistical software. The results of our research can be divided into two parts, depending on the factor that determines the attractiveness of the regions. If we use the value of the index of attractivity for each region, we could compare and rank them according to their level of attractiveness. The other way is to obtain the membership of a region in some cluster that highlights the similarity between regions and without comparing or ranking them. In practice, both approaches are applicable depending on the purpose of evaluating tourism attractiveness. But it is necessary to interpret both approaches differently, and I will talk about this later. Another outcome of our research was already mentioned, so I won't talk about the visualizations again. However, I would like to emphasize the possibility to personalize the outcomes of or to assess the regional activity according to the user's perspectives and preferences. For example, there is a scenario that a filmmaker wants to make a documentary about the wildlife, which is accessible by a ferry. So the filmmaker can use our application to choose the regions that meet his or her requirements. In other words, the filmmaker selects the important indicators, and the regions selected by the given criteria will have a very high value of the personalized attractivity index. To describe the technology, firstly, I would like to say more about the input datasets. We predefined the indicators suitable for assessing the regional attractiveness for tourism based on the features that are used in the already existing Smart Points of Interest application. And in addition to that, we determined other indicators relevant for the research. All datasets were extracted from the thematic layers from the OpenStreetMap database. These obtained spatial data were further processed using attribute and spatial queries, and their combination in the S3 ArcGIS software. The output of the spatial analysis was further processed in RStudio to find homogeneous groups of districts and to calculate both the clusters of regions based on their similarities and the index of regional attractivity. The final step was to create a cartographic representation of both methods. A suitable method for visualization of clusters is to use aerial cartographic symbols. And for the visualization of the value of the attractivity index, we used a choropleth map with a sequential color scheme. Also, the prototype of the web application was developed. The application uses a common two-layer architecture, the client-server architecture, and it is connected to the latest version of our regional attractiveness ontology, which is used for both the calculations on the server side and the presentation on the client side of the application. Finally, we get to the promised maps and the interpretation. The upper map shows the regions according to their affiliation to the clusters, and the lower map visualizes the index of tourism attractiveness and thus expresses the level of attractiveness. It is a typical statistical map that compares individual districts and according to the selected interval scale, divides them into 4 groups based on the value of the index. The index value ranges from 0 to 1, and the higher the index, the more attractive the district is. For the calculation of the index, the same data sets were used as for the determination of the clusters. However, comparing the outputs of both approaches, it is clear that the affiliation of districts to the same cluster does not mean similar index value. The difference could be caused, by example, by the fact that the regions are similar in the number of tourist values, but differ in the level of tourist infrastructure. These indicators of both categories are included altogether in the value of the index, while in the case of clusters, the individual factors are considered separately. On this slide, you can see 2 different ways to visualize the outcome of the clusterization. To illustrate the hierarchical clusters, we can use both a dendrogram and cartographic representation. The dendrogram shows the derived clusters in more detail. Apart from individual groups or clusters, it also expresses the proximity of the clusters and how similar they are. The map showing the same results does not allow the user to read such details, but it provides the spatial aspect of the distribution of the clusters. The combination of map and dendrogram then allows an even more detailed analysis of the problem. For instance, in Kenya, 2 clusters contain only 1 individual district, which are significantly different from the others, considering the attractivity for tourism. Unsurprisingly, the Nairobi district is the least similar region, and the next very divergent district is the Mandera district in the northeast of the country. The analysis of the structure of the districts belonging to the cluster number 1 also brings interesting results, since the districts are spread differently throughout the state, and a closer comparison with the data in dendrogram shows that some of them do not even remotely resemble the neighboring districts. I'm talking about the Lamu districts, district Taita Taveta and Migori, which are unevenly spread across the country. And at last, I would like to mention several business benefits of the assessment of region attractiveness for tourism. Several parts of the region attractiveness related to tourism can reveal market potential and gaps leading to new business development. Moreover, tourism is associated with common living conditions and standards, and especially in developing countries, because tourism is connected with many kinds of other services. Considering both regional and national government, the application could be a useful tool for better focus on regions that require more care in terms of their development, and at the same time to target the areas that already have some touristic potential and further support it. Likewise, the application can be used to identify regions that face similar issues, and their representatives can then focus on passing on examples of good practice how to solve these issues. From a business point of view, the application can be used by entrepreneurs to easily discover new opportunities for investment and expansion of their business to regions where they can find suitable conditions. To summarize the presentation with a brief overview, our research was focused on districts in Uganda and Kenya in terms of assessing their attractiveness for tourism. For this purpose, we used a variety of objective data and processed them with GIS and statistical tools to calculate both the attractivity index and the clusters. As part of the subsequent data visualization, the interactive web map application was developed, and one of the specific benefits of the application is to assess the attractiveness according to the user's personalized requirements. Overall, our approach is in its first stages and therefore provides only initial and superficial insights into tourism attractiveness in Uganda and Kenya. Possible steps for future work would therefore be to include more types of data to provide a more complete and more faceted picture of tourism attractiveness. That means including especially non-physical attributes relevant to tourism. Another option is to expand its geographic coverage to represent tourism attractiveness in the whole Africa, so that the users of our application can choose from multiple destinations for their vacation. That's all from me, and I thank you for your attention. Good afternoon.
Can you stop it, please? Okay. Thank you very much. So I understand that Otakar is online. So Otakar, can you tell us a little bit more about how you identified the end user groups to validate your platform and how you see this evolving going forward? Thank you.
Okay. Good afternoon, everybody. I hope you can hear me.
Yes, we can. Please go ahead.
Okay, fine. Our calculation of attractiveness are focused on many different target groups, because the understanding of attractiveness is very subjective. We are preparing maps of attractiveness or analysis of attractiveness for business or for living quality, and the example introduced in the IST-Africa conference is focused mainly on tourism. On one side, I think that the target group could be the tourism business in different countries or cities or regions, and on the second side, we plan to provide the results of our analysis as a background for some application or service for travelers to offer them to find some ideal destination.
Thank you very much. So does anybody have any questions or comments for Otakar? In which case, thank you very much indeed. And we're going to move on to our...
Okay.
Oh, sorry, I can see somebody's raised their hand. Sorry, Martin, go ahead.
Yes, I wanted to follow up. I think the presenter mentioned about a prototype interactive application. I just wanted maybe to throw more light on whether that was evaluated with a few of the users and what was their impression of it, whether it worked the way that they had planned it or not.
Sorry, I wasn't able to hear the question. Can you repeat it?
Okay, what I said is you did develop a prototype interactive application, and I wanted to know whether you evaluated it with a few of the users and what their impression was, whether if it worked according to the objective, the way you set up your objective, and whether they was it giving them that useful information on the tourism attractiveness.
This is just prototype, and we didn't provide our results to users, so we are waiting for some user feedback, if you mean this.
Thank you.
I was trying to clarify whether or not you had co-designed this with end users and what their initial feedbacks were, but it sounds like you're still at the prototyping stage and you haven't got that feedback yet. Is that correct?
Yeah. So we do not have feedback from African countries or from this research focused on tourism, but we are strongly cooperated on business attractiveness, mainly in Europe, and we have some feedback from different regions how to change the weights of various parameters and what is more and less important for them and what is much more significant for the attractiveness and for the understanding of attractiveness. Yeah.
Okay, thank you very much indeed. Yeah. So we're now going to move on to the last presentation of this session. So this presentation is focused on determinants of information system resources for business organizations' competitive advantage, a resource-based view approach.
Iyaloo Waiganjo, and I'm representing my co-authors in today's paper, which is titled Determinants of Information Systems Resources for Business Organizations, Competitive Advantage. And we have applied a resource-based view approach. So the motive and the problem area of this study is that technology has brought about globalization, which have made business organizations to continuously look out for innovative ways of doing businesses in order to have a sustainable competitive environment. Of course, we are living in the fourth industrial revolution, which is led by information and technology. Now, competitive advantage is a fact that allows businesses to produce goods and services better or more cheaper than their rivals. Now, to compete on a global market, an organization needs to have the best information technology and processes for designing, for manufacturing, for producing, for selling these products and services at the lowest possible costs. Now, it's not so easy to do that because then globalization has led to more competition among major players in variety of industries. So now that leads to be able to compete then, competitive advantages are determined by the unique variable resources controlled by an organization. These variables resources need to be within the organizations that are able to be controlled by that particular organization. And that's why this study, therefore, decided to X-ray the tangible and intangible information resources as a variable resource, that determines organizations' competitive advantage. When we are saying that determines competitive advantage, most especially in the firms that are in the similar industry, that are all competing for the same market. What are these touchable and untouchable information system resources that organizations can have to compete and to have a sustainable competitive advantage? So by doing so, by doing the X-ray, by X-raying this touchable and untouchable, the study then applied or the resource-based view theory. So the resource-based view theory, it looks at or it focuses on the in-house resources, the resources that are within the organization. It's not looking at resources to be probably outsourced, okay, or to be hired. No, it looks at resources that are within the organization. That is what it does. And the questions that always being asked is that when you're dealing with a resource-based view, is that what resource or resources rather an organization have? What resources does this organization have? And also, what resources can organization build? And what resources an organization can maintain? Asking these questions about these resources, the resource-based view relies on touchable and untouchable resources. When we are talking of touchable resources, we are talking of resources that have a physical existence. These are the resources that can be touched. Let's talk of computer systems. Those are things that you can touch. Let's talk of systems and programs that has been developed. Those are things that you can feel and you can as well see. But when we are talking of untouchable resources, they don't have any physical existence. You can't see them, such as skills, asset, human assets, knowledge. It's something, it's a resource, but it's a resource that you can't touch. Now, these two resources, they must be heterogeneous and immobile. What do we mean by heterogeneous? Heterogeneous means that they need to be different from other businesses. Different businesses have different resources. Even if you are in the same industry, you cannot have the same resources. You need to have different resources. Your organization must have different resources that other organizations do not have. And also these kind of resources, they need to be immobile. And when they are immobile, they can't be easily be moved nor replicated by another organization. So meaning that they cannot replicate them. And you can't move them. They can't be moved to another organization because they will not work. They are meant for that particular organization. It talks of the uniqueness of this resource. Now, these resources that are touchable and untouchable, must also be heterogeneous as well as immobile, they need to have 4 attributes. They need to have 4 attributes so that they will become now the VRO resources, which will provide an organization a competitive advantage. So let's deep digger now into this VRO. So because the VRO has been used by a lot of organizations to enhance their performance, and enhancing their performance, they are also gaining competitive advantage. So The VRO is a acronym of V standing for value. The value of that particular resource. What value does it have on an organization? And then R stands for the reality of it, how real it is, how not easy to get. That is the reality of it. How oftenly will you find it? It should be rare. That is one of the attributes. Now, when it's rare, it also needs to be immutable, immutability of it. It cannot be imitated so easily. It should cost a lot to be imitated. And when it's immutability, it needs to be organized. Organization comes in. This resource that you have is variable, it's rare, it can't be imitated, and it's organized to capture the value of this resource. Then that means it's having all the 4 attributes. And when all your answers to these questions looking at the attributes are yes, then you are leading to a sustained competitive advantage. So meaning that organizations, when they have their resources, which are touchable, intouchable, and they must be heterogeneous and immobile, then they need to possess these 4 values. Then that will lead you to a sustained competitive advantage. Now let's look at IS as a resource within an organization. What is this? So when we are looking at IS within an organization as a resource, we are looking at human capital. And like I said from the beginning, human capital, we are talking of soft skills, of know-how, of knowledge management, specialists. Okay, people who are specialists, these programmers and these algorithm developers, these are specialists that they have this kind of a skill, methods that are within that organization. That is a human capital that becomes a human asset of an organization. Then now we come to IT infrastructure flexibility. Remember, IT infrastructure keep on changing now and then because of its growth. It grows so fast. So infrastructures within an organization, we are talking of hardwares, softwares, data resources. We are talking of network resources. And network resource becomes now the fundamental of all information resources. So which of them do you have in your organization? Now, when you have these resources, you also need to look at IS relationship quality. The quality it have on your clients that preserve and of course return clients and customers back to your organization. When you have and analyzes this IS resources within your organization, they will be able to enhance your organizational performance. Having just that human capital, having that IT infrastructure, and of course now the relationship of quality. When it enhances your performance, when they are used and enhance the performance of your organization, they lead to competitive advantage. So for now, let's align this IS. Okay, we are going to align the IS into the RBV, aligning RBV to IS for competitive advantage. How do you then do that in an organization? So the variable IT strategies provides a blueprint that can be used to support and structure an organization's general business strategy. So meaning you have these variable IT strategies, they will then support the general business strategy. This organization, then it brings up the general strategy that gives now the objectives. Therefore, an organizational business strategy determines the overall business objective. So when you have a business strategy, it will determine the overall business strategy. When it determines the business strategy and the business objectives, then it will lead to having an IS strategy. Having an IS strategy, within the IS strategy, it will determine the kind of IS resources that particular organization have. These resources that are intangible and touchable, these resources that are heterogeneous as well as immobile, these resources, IS resources that have 4 attributes, talking of the value, talking of the realness, talking of the immutability, talking of the organization of capturing these values. When it leads to all this, this is how then IS is aligned in the RBV framework. So when you have aligned all this in that order, it gives competitive advantage. And with a competitive advantage, you gain more competitive advantage. And that is what RBV wants. It wants you to focus on your resources within your organization. This information system resources within the organization to what? To gain competitive advantage on the global market. So in conclusion, the RBV of an IS resource is viewed on the premises that an organization can differ based on their IS resources. So they can really differ depending on the resources that they have, even if they're on the same industry. And again, the RBV is hint on the fact that resources and capabilities that reside within the organization assist the organization to develop a sustainable competitive advantage. And lastly, is that considering that RBV theory lenses and x-rays how organization resources can enhance competitive advantage, it is proper to state that IS resources have a role to play in enhancing a sustainable competitive advantage in an organization. Kindly note that not all the resources that are valuable and they can actually lead to sustainable competitive advantage. It depends on each organization. So you need to have those uniqueness in your organization, those resources. So that brings me to the end of our presentation, and thank you for listening.
Thanks, Iyaloo. So does anybody have any questions for Iyaloo? We're running a little late, so we're going to go directly on to the next presentation in a moment. Okay, thank you.